Okay, so as we continue our discussion on Chapter 1, we need to discuss the accounting equation fairly somewhat in depth because it's something that you're going to really need to know. All right, so let's look at this first question, a little fill-in-the-blank question up here. It says, the rights or claims to the assets of a business may be subdivided into rights of blank and blank. So we're looking for parties here. So let's just go ahead and kind of put, I'm going to abbreviate here, assets equal liabilities plus stockholders' equity, okay? And the assets that they're talking about refer to these assets right here, right? So when we talk about liabilities, liabilities to who? Because liabilities, if we think about what we said earlier, stockholders' equity is really net assets. So if assets equal liabilities plus stockholders' equity, this L here is a subtraction, is it not, from assets? So liabilities, what are liabilities? They're debts owed, obligations to who? Well, to creditors. Okay, creditors. And this kind of represents, I'm just going to circle an L here, liabilities. Stockholders' equity, who are stockholders? Stockholders are owners. So the rights or claims to the assets of a business may be subdivided into rights of creditors and owners. Okay. Next question says the balance sheet represents the accounting equation. True or false? This is an absolutely true statement. If we think about a balance sheet, and we have current assets and long-term assets, and the same thing for liabilities. Then we have different parts of stockholders' equity, but we start a balance sheet with assets, then come the liabilities, and then come the stockholders' equity or owner's equity section. So this little true-false question here is a true answer. The accounting equation can be expressed as, and we have four choices. Now, I want to tell you that choice C here, let's put a little arrow there. Hopefully it's an arrow. Choice C is really is correct because that is the accounting equation. But I think what the spirit of this question is asking for is, how can the accounting equation be rewritten? And if that's the case, we said up here just a moment ago, and in the presentation, we said that stockholders' equity is essentially net assets, or what's left over from the assets after liabilities had been removed from the equation. So if we look at this choice B here, assets minus liabilities equals stockholders' equity or net assets. So here is our correct answer. But if you want to put a circle around choice C there as well, you can, because really there are two correct answers for this question. Next question says, which of the following stockholders' equity accounts is increased when an owner invests money in a company? Okay. Which of the following stockholders' equity accounts is increased when an owner invests money in a company? So if we look at this, there are actually two accounts here that are increased when an owner invests money. So we need to know, well, stockholders' equity is found on the balance sheet, is it not? Revenues are part of the income statement, so let's put an X by that one right away. Retained earnings flow from net income on the income statement. Okay, so even though retained earnings are found on the balance sheet, they are a reflection of, the formula revenues minus expenses equals net income. and then net income flows over to the balance sheet to retained earnings. This is also an incorrect answer. Do the assets of the company go up when an owner invests money? Yes, they do. But assets are assets. They're not part of stockholders' equity. Those are two separate sections. A is wrong. B is correct. If you recall in our little example that we had with Net Solutions, the owner, he invested $25,000 into a business account, and the business got an increase in assets, $25,000, but the owner got common stock, so common stock went essentially from 0 to $25,000. So choice B is our answer. Looks like we have a few more questions here. It says, which of the following occurs to stockholders' equity when a company purchases land for cash? We have 4 choices. Assets increase and stockholders' equity increases. That is not true. B, I'm going to go through these and then I'm going to tell you why the correct answer is the correct answer. B, assets increase and stockholders' equity decreases. Also untrue. C, assets increase and there is no impact on stockholders' equity. Only half of that is true, the second half. So let's look at D. There is no impact on total assets or stockholders' equity, and that is absolutely true. If you recall, now in this particular case, we are going to change the mix of the assets, because if we buy land for cash, meaning we're using cash to buy the land, that means cash is going to go down, but land is going to go up by the exact same amount. And because we're using cash or we're not financing it, we haven't created any liabilities, so stockholders' equity is unaffected. Our correct answer is D. Okay. Goods purchased for future use in the business, such as supplies, are called, now we talked about this in the PowerPoint video presentation. Supplies are an asset, no doubt about that. So really, when we look at these, there's only, even if you didn't know the exact what supplies are, you could say, okay, well, liabilities are not an asset. They're the opposite of an asset. They represent an obligation. Revenues are over on the income statement. Let's see here. Prepaid liabilities. I'm not sure what that is. I'm sure if I thought about it long enough, I could come up with it. Prepaid expenses. That's our answer right there. As we use those supplies, we're going to expense them. Okay? Therefore, when we have not used them, when we just purchase them for future use, they are prepaid expenses or future expenses. Okay? If that's confusing to you, you really need to study this concept of prepaid expenses. It can sometimes cause problems. All right, here we have a little workout problem. Very, very easy, probably the easiest one you're going to see all semester. It says if the liabilities owed by a business total $300,000 and stockholders' equity is equal to $300,000, then how much, then the assets also total what? I'm not sure why we have the word also in there. But let's just go ahead and write the, let's see, I made a mistake there. Bear with me 1 second. Assets equal liabilities plus stockholders' equity. And so if we take this formula, we have said, in this case, A is what we're solving for. Well, I just keep making mistakes, don't I? $300,000 in liabilities plus $300,000 in stockholders' equity. So if this is true, 300,000 plus 300,000 is 600,000. And this is, in fact, our answer. So if we had assets of 600,000, but we had liabilities of 300,000, we would have net assets of 300,000. Stockholders' equity, liabilities, and then these over here, this 600,000 is, these are our assets, total assets for this company. One more question and then we'll end this video. It says right here, if total assets increased by $190,000 during a specific period and liabilities decreased by $10,000 during the same period, the period's change in stockholders' equity was. Okay, so I always, you can use some basic algebra here, and that's always a good idea as long as you do it correctly. But I'm going to do this a little bit differently. I'm going to kind of bring in a business perspective, and I'm just going to make up some numbers here. And there's absolutely nothing wrong with this. I'm going to say that assets were $300,000 before, okay? And I'm going to say that liabilities were $100,000, and that means that stockholders' equity was $200,000 before. Okay? Now I'm going to add $190,000 to my $300,000. And if I do that, I'm not going to bring up the calculator for this. My assets, it says my assets increased by $190,000, so assets are now $490,000. It also says that liabilities decreased by $10,000, so I know that liabilities went from $100,000 to $90,000. And if this is true, stockholders' equity must be $400,000. Now be careful. Be careful, because 400,000 is not your correct answer. The correct answer is 400,000 minus the original $200,000. Now again, the reason that I'm doing it this way is because I want you to think about this less from an algebraic perspective and more from an actual business perspective. I want you to kind of visualize the impact that these changes would have in a real business. Okay, so $200,000 is the answer because it says the period's change in total stockholders' equity was, not what the new figure is. So we're looking for this figure right here, 200,000. All right, that's it for this video.